following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 11th. How about that, 7-11? I guess we could call it Craps Thursday. Terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call the past is the present. You know, you've heard me say before, become a pioneer of your future versus a prisoner of your past. The prisoner of your past boils down to two primary things that hold each of us back from taking action. Those two things being not being loved or not being enough. Both of these beliefs are caused because of what I call a bad electrician in our past. And what I mean by this is that there are events that have occurred in our past that have caused us pain. You know that to be true. We all know that to be true. Usually, they're a result of having an expectation level that simply wasn't met. Oftentimes, when those events are revisited, we can find that the expectations, well, they just simply were misinterpreted. The key is this. What successful people do, and you are a successful person, you know it, I know it, what successful people do is they use these events as springboards to overcome the things that are holding them back from being the person that they want to become. This is how the past becomes the present. And by present, I mean gift. Probably one of the best gifts that you could ever give yourself. So I say, do this. Identify your weakness. Embrace that pain. Create a new outcome and turn that into a strength. Turn it into a gift. Make the pain of the past the gift of the present. Just imagine a life where your weaknesses become your strengths. Oh, what a world it would be. The market's weakness, well, that has been the threat of the punch bowl not being replenished. And yesterday, Uncle Ben Bernanke, or at least the way the market has interpreted it, he suggested that the Kool-Aid stand, it's open for business. And that Kool-Aid stand, in my opinion, that is located on the moon. And off to the markets they went. So it's off to the moon, Alice. Let's go check out these markets. Let's see what we've got out here. Futures up boldly out here. Right now, you've got Dow futures up 129 points, trading at 15,372. S&P futures up 17 points, trading at 1665 and a half. NASDAQ futures trading out at 3024. That's up 27 points. Russell 2000 up 10 points at 1028. King dollar back 84 ticks right now, out at 83.39. A lot of movement in the currency market. Talk about movement. Oh, my goodness. We take a look at all the currency pairs out there and see wild swings. Right now, the Euro futures, Euro is up about 144 ticks out there. Hey, Goldilocks. We got Goldilocks and silver taking off to the moon. Big move in silver, up almost 5% here, 4.5% this morning, up 88 ticks, not even at its session high. Gold as well, not at its session high. It's up $36.50 out there. We'll see what kind of action Jackson we can get. You got platinum up $36. That's up 2.5%. Light sweet crude back 88 cents. Not a big deal back there, and you'll see that as we take a look at the light sweet crude contract. Over in Asia last night, they liked the punch bowl as well. You had the Hang Seng, that was up 532 points. That's 2.5%. The Shanghai, that was up 3%, 68 points, we'll call it. The Nikkei up only 56 points. We'll take a look at that as well, only 0.4%. Over in Europe right now, the DAX is up 91, just a little over 1%. The FTSE up 41, about 0.6%. Our call-in number, 877-927-6648. So much to look at. Where is it that we should start? Well, let's take a look at the daily chart here for the index futures. Now let's see where they are headed to. Let's go take a look at the NASDAQ futures out here first. NASDAQ futures, right now, what they have done here so far is they've completed an A to B equals C to up, a 1-to-1. That price projection, 3,026. You're trading at 3,023 right now. The market on the shorter-term chart, let's go take a look at the intraday chart, the 30-minute chart for the NASDAQ futures. What we're going to see here is price got into the top of this little rising price channel now. This is a rising price channel coming off of the lows from June 24th. So we got a significant low in the marketplace at this stage with volume down there, but we still have a significant low on June 24th. If we take a look at the channel lines, remember when you're putting together your channel lines, you want to use the highest number of co-located opens and closes. We're not using the bottom or the top of the candle. That means we're not using the wicks. We're using the bodies, and it doesn't matter whether it's an open or close. Looks like this is the rising price channel. Why do we want to know about these? Because price usually is contained within this range out here. We can see, as I blow this up on the screen, we see that after Uncle Ben's comments out there about the punch bowl, about the Kool-Aid stand, the market went ahead and took off to the moon. In the case of the NASDAQ futures, on the 30-minute chart, 120, whatever time frame it is you want to use, they ran right up into the top of that channel line. Of course, they immediately went into that extreme overbought territory, began working its way off at, in the case of the NASDAQ futures, began working its way off at about 5:30 this morning. So, how does a market work its way off? Well, it works its way off by either pulling back, and it has only done that slightly, or just simply traveling sideways to work off that condition. It's done it a bit out here, so it's got room to run to the upside, but I suspect that what we'll see is price will be contained within this rising price channel. Now, if you were going to jump on board this train, where is it that you want to jump on board? Would it be up towards the top, or would it be to wait for a pullback, maybe a pullback down even into the bottom of that rising price channel? Well, I leave the answer to that question up to you. If we go back to the daily contract out here, what does this set up? Really, quite frankly, it's very simple. It sets up a run to test the highs of May 22nd. Unless there's going to be one huge pop and drop today, this is going to run up and test the May 22nd high. That number is going to be 30.53. It's going to be the same thing on the futures contracts as it is going to be on the indexes. And that's where we start. Now, let's go take a look at what's going on around the world. Let's see, because, it is a one-world market out here. So let's go see if we can peek around and see what is going on out here. Take a look at the celebration. Let's start here with the FTSE. The FTSE today, getting up into that 0.618 retracement level, 65.52. Next level on the way up, should it decide to take that tour, would be 66.94. You do have a Gartley sell pattern in place, and really depends on the type of candle that this closes with. Right now, it's a bullish candle. If we're to close, I'd say, right now it's trading at 65.47. Probably right around the 65.20 level. If, in fact, it pulls back for any reason, what this would form would be a shooting star candle that would be coming into a normal resistance area, and that is on the FTSE. So right now, everything looks okay. All engines are go, and the engines are go here for this to actually move up to the 66.94 level. That is on the FTSE over in the UK. Let's go check out the DAX here. The DAX kind of interesting right now. As we take a look at this, it has formed also a point. That's a FTSE. We don't want to repeat that. Let me grab the right chart out here. My goodness, there we go. Now let's take a look at the DAX. It is trying to form the 0.618 retracement level. What it's run into is a little bit of selling pressure here at the downdraft from June 19th. You had a big, now that's where our markets were finding resistance. That resistance now, old resistance becomes what? That's right. It becomes new support. So that resistance area that we've been looking at, that quite frankly ends up becoming new support unless you get it closed back inside the June 19th level. In this case here in the DAX, now we can see the DAX is actually weaker than the general marketplace, or at least certainly the U.S. market. And with the FTSE, which has been strong, if I go back over to the FTSE, let's take a look at its June 19th candle out here, because those are key. If we take a look at the FTSE, the June 19th candle has had no problem getting over that area. In fact, it got over that area, and it did it with a gap up on July 5th out there. Of course, we know we expected the July 5th gap just simply because of the holiday trading session that we had inside the marketplace. But if we do take a look at the DAX here, it still has a bit higher to go to really complete. We took a look at that yesterday, a nice Gartley sell pattern. Of course, what it would need a reversal candle. And that would take it into the 82.13-ish, 82.17-ish level. You'd have a nice 1.61. This has got great Fibonacci numbers. We'll see if, in fact, this holds. But right now, the DAX here, even though, and it is bullish, this is not bearish. It gapped up today, even though it's a red-looking candle. It's just telling telling us we've got some selling pressure inside the DAX as it tackles its June 19th level. Our markets are above that area right now. So in our case, it is a support area, not a resistance area any longer. If we go take a look at the markets in Asia, here last night, you had the Shanghai up with energy. You had some good volume behind its move out here. Of course, this one had given the best bottoming pattern from the standpoint it created a 1.272 butterfly, and it did it with a hammer candle. It did it with a big hammer candle. That said that the bulls were ready to defend their position. We saw price come down, and it's really just tested a little bit of the highs out here. Not with any real conviction to the highs. Of course, we also know that the Shanghai was coming from an extreme oversold level. Now today, this morning, last night, it had some real conviction behind its price move as it got up to that dead cat bouncer, that 0.382 retracement of the highs. In case of the Shanghai, that's the highs from February 18th down to the lows of 625. Next stop in the Shanghai should be 2320, the 0.618 level, before it decides to rest. Let's go take a look at the Hang Seng. Then we'll finish it off with the Nikkei. The Hang Seng out here getting up above its B point of an A to B equals CD up. I don't have the volume on this, but this has been making beautiful A to B equals CD patterns. If you come all the way back to the October lows, October of 2011, it made a 1-to-1 A to B equals CD up before it cracked right around the February 2013 timeframe. Then it made a 1-to-1.618 A to B equals CD down. So this one is making beautiful A, B equals CD patterns. The D point of a 1-to-1, and that's not where this will stop at. It would be 21,726. It looks like more like 22,157-ish. 22,218 is where the Hang Seng should travel to. The Nikkei here, real quickly. The Nikkei still has not been able to break through this Gartley sell pattern out here. Something to think about. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, one of the things that I like to look for, and I think we should always be looking for some divergences in the marketplace, just simply to be aware of. You know, it's like going to AAA, for those of you that can remember going back to those days when you would get a trip ticket if you were going on vacation. And, you know, they always had the detours around there where there was road work. You know, I grew up in Detroit, so as you would travel down, whether it be to Florida, Georgia, wherever you might go down along I-75. It's always good to know where those trouble spots were going to be, those detours out there. Well, in the case of the markets here, the detour signs are always going to be the divergence patterns that you see out here. Now, we know we've been dealing with divergent patterns with regard to volume on the way up. We've had volume on the way down, and we've had light volume on the way up. Of course, we've been paying attention really to the New York Stock Exchange, to the oscillator, to the summation index, using that as one of our trend guides. There's some other trend guides that I put in this morning's newsletter, Mastering Probability, which, by the way, if you haven't had a chance to check that out, you know, you really should do that. Go over to the homepage at TFNN.com. You can test drive that for 30 days, unconditional money-back guarantee. One of the divergence patterns that's out here is mentioning the currency market, which has had just simply wild fluctuations ever since Uncle Ben was on the stump last night. One of those divergence patterns that we're looking at here on Tiger TV, and if you are watching, if you are listening, I should say, to the show on the radio or your mobile device at TFNN.com, thank you so much for doing that. You can always go over to the right-hand side of the web page, the main page of TFNN. You'll see a button. It's got 3 smartphones. Click on that. The show will stream live, and you can always catch the archive on Channel 9. We're taking a look at the bottom of this chart. We're looking at is the Euro Japanese yen, and it does a really great job of tracking the U.S. stock market. What it also does a great job of is being able to identify divergent patterns that lead to some type of correction out there. Now, in this case here, you're looking at the bottom of the screen. That's the Euro Japanese yen, just a line chart out here. It's no bar chart, no candlestick chart, anything like that, just simply a line chart. And what I've identified here on the top is the S&P 500. And if you take a look at the divergent lines out there, they've always led, it's the currency market that has always been the one that has that ends up being the winner in the contest. If you just simply come back here to the time frame of about December of 2012 down to the end of December, what we saw was that's when we had in our marketplace, right? We had what do they call that? Fear thing out there, I forget whatever the politicians and CNBC were calling it. My apologies there, but you know, the fiscal cliff, that's right, the old fiscal cliff thing. Well, here's the fiscal cliff in the stock market that was occurring, but take a look at the Euro Japanese yen. It was rising. Which way did the market resolve itself? Yes, in the direction of the Euro Japanese yen. If you come back here to the time frame February of 2013, we had the euro that was declining. We had the the S&P 500, which was moving up. What did that lead to? That led to a correction in the marketplace. If we come back into the time frame here of April of 2013, you had the stock market moving up. You had the euro moving down. Eventually, that led to a little correction out there. And so you're just always looking for divergent patterns in the marketplace. This one that I've got up here, I'm going to delete that because that was not a divergent pattern. Where we are right now, though, we do have divergence. You can take a look at the bottom of my chart out here. You can see the euro, Japanese yen that is sloping down. And sloping down ever since the since we came back from July 4th or before July 4th, and the U.S. stock market has simply been moving up. So it's a divergent pattern that says you have to be aware of these markers out here. Now, we're up towards the top of a trading range. What does this really say? What this really says to me is not so much I'm starting to lose my belief that we're going to go back and test that 147 level inside the 6-month unseasonal unfavorable cycle out here. But what this does tell me is, there's a little correction that is going to be coming. That's a correction that, as long as the support levels hold inside the S&P 500, I'm going to say that's going to be the 1576 level. That's going to be the top of that November area. As long as that level holds, the S&P doesn't get back inside that part of the trading range, that will become a buyable correction out here. So that is some divergence that's good to take a look at. As long as we're in this tab of my charts out here, and I always show divergent patterns in the marketplace just to be aware of. We'll take a look at GE because that's always, the general here is always a great indication of potential reversals inside the Dow. The GE is I don't know, it's like the 27th, 28th holding waiting inside the Dow structure out here. But what you want to take a look at is divergence. Now, there is divergence most certainly in GE as well. If we take a look at right now, we know that the Dow is going to move up today. I don't know what GE is going to do, but if we take a look at coming off of the June 18th level inside the Dow, what you can see here is, if I just do this real quickly here, you can see that we're basically at horizontal area. Now, that does not include today's session out here, but if we take a look at GE, what you can see is an absolute decline off of that. What that says is we're going to see a little bit of a correction that you might be able to buy. 877-927-6648. I'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 161 points, trading out at 15,451. S&P up 18 at 1670. Composite up 39 points at 3560. Russell 2000 up 10 at 1031. Google up about 476. Apple up $1.60. Microsoft up 38 ticks. Intel up 31. Cisco up 26. Leading the charge to the upside is Celgene Corp up $9.74. That's up 8%. You've got Allen Lamb Pharmaceuticals, ALNY, is the ticker symbol, up for a nice 14% here this morning. Let me see here. It looks like maybe on some numbers out there. So up 14%, trading out at about $43. Google up 460. Rand Gold, GOLD, up 7.5% here this morning. Bridgepoint Education, maybe there's a buyout or something going on here. What do they have? They're up 32%. Plods Ashford University. I don't see what's behind that move. F5 Networks out here. That's up 11%. Cummings CMI up about 3%. To the downside here, I got to go a long way, I think, before. Yum Brands really the leader outside of all of the different Pro shares and Direction shares out here. Also the downside, Neonode. NEON. That's off 6% this morning, down 47 cents. Family Dollar Stores off about 40 cents, not a big deal out there. You've got Avgo Technologies off 29 cents. Not a lot right now, leading to the downside. So let's go check out these markets here. This is going to be interesting. We're going to take a look at some of the core equities out here and see how they're behaving in this pop, because this is where we're going to get some really good information with regard to the market, in my opinion. Now, first one we're going to look at is ExxonMobil. Now, ExxonMobil, the energy sector, the XLE, has truly been struggling. We'll go, in fact, I believe it might have had a key reversal day yesterday, so we're going to go take a look at that. Now, in the weighting structure of the S&P, it's kind of dipped down to, I don't know, maybe number 5 or so. It used to be number 2 in the weighting structure of the energy sector, so it's no longer up there. But what's interesting here, if you trade the DIG or the DUG or the triples out here, you want to make sure that you're always paying attention to ExxonMobil, Chevron, and Schlumberger. I believe the 3 of those represent more than half of the weighting structure within inside the XLE. If those 3 don't, there's a 4th one out there that will get you all the way up there. Now, in the case of ExxonMobil, it's also obviously the heaviest weighting inside the S&P 500. I believe it still is the number 1 weighting inside the S&P 500. If not, it's right up there in the top 2 or 3. It's been trading in a $7 trading range. So we're at an interesting precipice here, if that's the proper terminology, for ExxonMobil, because it's trying today to take out its consolidation level. The top of that consolidation level, you could call it $93 and a little bit of change, $93.67. If you take a look at the last swing point, that would be your May 22nd area, just like our market here. May 22nd. High is let me see, let me get the right number out here. May 22nd is 93.50. May 20 and 93.50, that would be the number. You're trading at 93.55 right now. Now, if you get a breakout today with some volume, this actually becomes a pretty cool trade because your stop is going to be just somewhere below inside the bottom of this consolidation level out here. Now, that would bode well for the energy sector, but most certainly just specifically for ExxonMobil. Now, this is a consolidation that's been ongoing since July of 2012, so it also is a one-year consolidation. As we took a look at light sweet crude had broken through a similar consolidation level. That's got a $14 trading range inside it, half of what we see here. And so if the markets truly are going to be busting out to the upside, ExxonMobil would take you from $93 and change. It'll take you all the way up to 100. And 100 is going to go ahead and challenge I believe, the all-time highs. Let's go back and put this on a weekly basis out here and take this back. Yeah, ExxonMobil will take you all the way back out to, it'll challenge the all-time high from 2008, which is 96.12. So that is if it goes ahead and it breaks through the consolidation level. So we'll go ahead and put this back here on the chart on the daily. This is one that you want to watch. It gapped up this morning as everything did. We'll see if there's any kind of momentum. If, in fact, it can't break out, what will be interesting here, because you're inside this trading range, well, number one, you'll see a move, at least a retracement back to let's take a look at the last leg up here from the low off by June 24th. And this will give us, this is why we want to take a look at some of these core products out here to get a feel for, we know how the futures market handled Uncle Ben's comments out here. Now I want to see what the traders are really thinking here today. If it can't bust out of this trading range, and a normal pullback would be to about the $90 level, that would be your 0.618 retracement on this. And of course, if you see any kind of volume, what will happen inside this trading range, it will go ahead and move all the way back down to the bottom, which is at the 85 level. So ExxonMobil, in my opinion, is one of those key stocks that you want to be watching today for clues as to what the market is really going to do here. We'll shift over and take a look at the XLE in a moment. Another stock that we clearly want to be paying attention to is IBM. IBM, quite frankly, looks dismal. Right now, it's traded up. It's at the 193.83 level. We need to see how this actually trades. It's going into a resistance area that's been tested only once, which is June 27th out there. The low is 195.29. It's going to be very difficult for the Dow to get some real giddy up and go without IBM, the real general of the Dow, truly moving along. So the key here inside IBM is going to be how does it come into June 27th? That's got 3.5 million shares, but the gap down, which was on the following session on June 28th, was 10 million shares. So it's going to be key as to how it comes into that area. You start coming in with accelerated volume, that gives you the A to B equals CD up. That means it would take out the July 8th high, which only has 3 million shares, so coming in there should be no problem. And the A to B equals CD inside IBM would look something like this. It's just a small one, albeit a small one. It still's out there. That would take you into the 198 to maybe 200 area. And there it's got some additional selling pressure, which was on June 21st out here. So key area to be watching on IBM is going to be how it gets into the level of 195.29. So there's a second area for us to actually go ahead and watch. And we really want to watch it, especially as a result of taking a look at that euro-yen chart out there and knowing that we've got some divergence, knowing that we also have divergence in the General himself, General Electric, and the way that the Dow is out there. So we can't ignore those things. And the reason we don't want to ignore that is because what it may offer is some nice corrections in the market. And in this case here, with Uncle Ben doing what he's doing, unless we start to see volume come back, what it really provides you, in my opinion, at this stage here is a buying opportunity. Let's go take a look at Intel out here. Had a request, and I just simply overlooked it yesterday to go ahead and take a look at the Intel chart. So that means we're going to do it today out here. If we do take a look at Intel yesterday, INTC, by the way, is the ticker symbol. that created a hammer candle. So as Intel was moving down, let's just take a look. This had formed a nice 0.618 Gartley sell pattern. Let me go ahead and take a look at the retracement level. Let's see where it actually got to yesterday. So when it comes to the SOCs or the chip makers, Intel is the number one weighting inside that structure. So here's another, general that we need to be paying attention to. And yesterday was basically a flat market. But what Intel was actually telling us here, we'll go take a look. We'll see if we'll have time during the next hour and 15 minutes, certainly, to take a look at the stocks out here. But yesterday, Intel, as it got down below the 0.382 retracement level, what held it in place was that 200-day exponential moving average. That's that little green floating line going across my screen here. So in the case of Intel, you know that you've got very strong support here at 2264 because of that hammer candle. Now, today, you're absolutely getting follow-through. You're getting follow-through with that gap up. Of course, it's coming into a hammer that failed, which is right here on July 5th. Out here. And so what does this set up for Intel? Now, it all depends on the volume that we see, but volume right now that it's going into from the downside, is really going to take you all the way back here to June 20th. So that makes so Intel here has been a little bit weaker than the general market, but what it has given you bullish signs out here with that hammer low at 2264. Right now it's trading at 2363. So this sets up a run to the 2598 level out there. Might even be a potentially good trade if, in fact, the market is going to continue to take off. Of course, what do I mean by a good trade? Well, what I would mean is we'd have to go take a look at the position size calculator. Let me see if I can actually fire up the turbo boosters on that. We can actually take a look at a potential trade here inside of Intel. Let's take a look at what it potentially could look like here. So we're going to take a look at, you'd enter, let's say, like right around now. Give me a second here. And we're going to take a look at areas where you could find some real resistance inside this. So you're at about 2370 is what we're going to say. And your targets here, the first place where we should run into resistance is going to be the June 19th, June 20th level. With the market being able to get through there, let's assume that Intel should at least be able to get up to $25 even Steven out there. So at 25 even Steven, maybe it can get all the way up to the top here at 25.98. So those are going to be two numbers that we'll go ahead and key in on. And what we're going to do is we're going to go ahead. So now we've got the numbers. We've got our entry. And we know that our stop should really be below 2264 out here. So let me write that number down on a pad of paper. 2264 as we create the little recipe here. Now, folks, if you've never used the position size calculator, I meant to check to see if it was on the homepage of TFNN.com. I'll do that during the next break out there. But it's available to all of my subscribers. What you do here, the key to trading is making sure that you don't overtrade. And the easiest way to do that is to use position size. And that is the key to trading. INTC is the ticker symbol. In this case here, you just simply go ahead and input the ticker symbol. Let the system go ahead and do a quick search for it, locate that. And what it's also doing at the same time, it's immediately populating what the last 10 days trading ranges have been, because when you enter a trade, what you don't want to do, you don't want to be right on the trade and wrong on the stop. And wrong on the stop, to me, means having a stop so tight that you are inside the average daily breathing room. And that's what an average trading range is to me. I just simply use the last 10 days. You can see down here in the bottom of the screen, it's the last 9 days because of the July 4th holiday. That still is good enough for me. The second thing here, I've got a little pull-down window that's really used to determine the weighting, the overall weighting of your portfolio on a stock. You don't want to have more than 10% of your funds tied up into it. Now, you use that as a guideline. In this case here, we're looking at a bullish versus a bearish trade potentially inside Intel. And then you put in your free trading capital. I always like to just simply use it in increments of 10 grand, and that way you can figure out how many shares per 10,000. Now, this has got an average trading range of 53 cents. If we say that our entry point inside Intel was right now at around 2370, and our target on this, let's use the optimum target, which would be 25.98. Let's assume it makes a run all the way back for its highs. Let's do a little quick calculation. Now you can see what came up on our screen here is by using a 1% risk, or using a trade that's 1.618 of expansion of our average true trading range. This has us using 28% of our capital on one trade. We wouldn't do that. I wouldn't recommend doing that. Let's take a look at our reward to risk. Reward to risk on this trade here is $2.66 out there. So that may not be the reward to risk that you're using, but we want to take a look at the hard stop. Now, the hard stop on this is 2284. 2284 is not below the hammer candle, which is 22.64. So, and you'd really want to have your stop below that. So at a 2.5 to 1, maybe there's some better trades out there. But if you're in Intel, what you want to know is you want to know where that support level is. And if we go back to take a look at that stock chart here, inside Intel, if this hammer gets broken, that means a close below 22.64. There's nothing to stop the descent other than moving all the way back down into the April of 2013 area at around $20.75. So that is the analysis on Intel out there. Don't know that it's really the best reward to risk trade in the arsenal of trades that are out there. Now, let's go take a look at the metals markets. Let's go see what we've got going on out here. We've got Goldilocks. We've got gold trading out at about, give me a minute here to put that up, trading out at $12.82. And it is truly trying to break out. As it tries to do that, it's up right now, $35 and change. And it's trading inside the downdraft candle session from June 20th out there. That's significant. The low of that is $12.75.40. You close inside $12.75.40. Well, and we may see that anyways here today. You can easily see it move back up to $13.21.50 to test that April 16th high volume bar. You get it close inside $13.21.50. Well, let's see. Today's Thursday, so we won't see the change inside the CFTC COT data this week. But next week, you'll see the non-reportables scrambling for the doors all at one time. And when they scramble for the doors all at one time, you're going to see gold get up to about 14.15 out there pretty darn quickly. So that would be a big short covering rally. But right now, the metals marketplace looks pretty darn good out there. If we go take a look at silver, it actually is having a better day than gold, up 4%, up 84 cents right now. And it's finally cleared this candle here that I was so concerned about, which was that June 26 level. You like to be able to clear those candles, and at least the body of the candle, the top of that was 1958. You're at 2010 right now. Assuming that you close above that, that says that silver, high-ho silver, should go test the April 16th low right around $22 and change out there. If we take a look at light sweet crude, see what it is doing here in the marketplace. Light sweet crude, is even though it's trading a little bit lower, that is not a bearish candlestick. What light sweet crude did so far, it made a 100%. It's done that too. It's made a 100% move of a move, my apology, coming all the way back here to the time frame of May of 2012. It's also made a 1-to-1 A to B equals CD, a large one, and a 1 to 1.272 AB equals CD. Light sweet crude, unfortunately for you and I, it's got more room to the upside. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow up 144, S&P's up 16, NASDAQ up 37. The New York Stock Exchange, that's the key. Actually, the leader in the clubhouse, up 1 2/10% right now, up 116 points. So somebody asked me, okay, Steve-O, what does it take for you to get bearish in these markets again? And it's really the same thing we've been talking about here for days, and that is for the bull or the bears to be able to take control of the markets. How do we know that? Well, we just simply pay attention to the New York Stock Exchange. It'll give us the signal first. What it needed, for example, today was 2,046 net declining issues, not what's going on right now, which is 2,434 issues to the upside. So you got market breadth in this market here. You got wide participation. That was one of the things through some other tools that I showed inside my newsletter service here this morning. It was something that I had really overlooked from a market breadth standpoint, but it's back in the tool bag. It's back in the arsenal out there, and that's what it would take. It takes for that oscillator to get down below zero. It takes for the summation index to start turning down out there. And it also would take the VIX to get back above the 50-day exponential moving average. Had another question in the den earlier about the GDX, the Gold Miners ETF trust out there. Right now that's trading at 24.37. It's trying to get some legs. It's come off of the bottom very nicely here. You know, that this has been smoked just like gold, and it came off the bottom with some wide price spread and accelerated volume on June 28th. 75 million shares to the upside. That's after its largest volume day to the downside, which was on June 20th, which was with 67 million shares. So this thing has come off of the bottom nicely. And what that really provides you is some good support down at 22.21. That 22.21 level, the low of June the 26th, that should hold. If it get closed back below that level, then it says, okay, you know what, there's just selling pressure inside these metals equities. Where could this bounce to? Well, what you've got to take a look at is you have to take a look at some of the natural areas of resistance that it's going to run into, and that's by taking a look at the gaps and taking a look at volumes that are out there. So the GDX first is going to run into pressure. This is not going to surprise anybody out there. When I mention the date, you could probably already mention it for me. You could say, hey, Steve, you're going to say June 20th and June 19th. Exactly right. We take a look at the top of June 19th, 2544. That's the first mountain. It's not even a mountain. That's just a little peak that it's got to scale out there. If it can get above 2544, then it's going to get into the lows of June 19th. That's going to be 2642 out there. You'd like to see it move into these areas with some another sign of strength, which would mean more than 67 million shares out there so far today on its gap up about 6.6 million shares in the first, less than 30 minutes of trading out here. So volume so far pretty decent. If it can scale this area, get into the June 19th bar, that's 2642, then the next area of some turbulence is going to take you back to April 15th. April 15th's low, 28.99. That's got 74 million shares. So you're going to want to see the GDX picking up volume as it comes into that area. If not, you'll see it just simply bounce around sideways. If you can get inside 28.99, the next area of turbulence is going to be somewhere in that April 12th candle, anywhere from 32.11 to 33.45. Now, the dead cat bounce, and this is where I expect to see the GDX move to, which is also the 200-period exponential moving average, slightly above that, is $34.83. It's at 24.33 right now. So you do the math. It's at 24.33. Your risk is down at about close below 22.21, and this probably has 34.83 written all over it. It's got to clear some very strong resistance areas out there, and if it can get above 34.83, 42.63 is not out of the question, because that would be a normal move, nothing more than a 0.618 retracement. Man, time flies around here, especially when you go to the moon. Folks, always remember this. You have an amazing power within yourself. That power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, and paint magnificent masterpieces. But most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. We'll be seeing you soon. Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.